Welcome back. Every single day at noon Eastern, on the TD Web Broker platform. Greg Bonnell hosts MoneyTalk Live, a show featuring some of the top investment minds at TD who provide their thoughts on all things related to markets. They answer your questions when you send them in, and Greg is here to tell us a little bit about the questions that came in and some of the cool people he's been talking to. You're the hardest working man in investment television, Greg.
Oh,
Every
thanks
day.
for that. And lots of cool kids come on our show. No different this week. I'm not going to break any news in the program by telling the audience, of course, inflation, central bank rate hikes have been the big story of the year. BOC Governor Tiff Macklem just saying today, maybe rates are already high enough to bring inflation back down to 2%. So if we're at the point now, we've ended the rate hiking cycle, of course, there's the fallout from that. I mean, the whole point to cool inflation was to slow the economy. So what about that landing? Is it soft? Is it hard? We had Robert Both. He's a macro strategist at TD Securities on the show this week. He says economic growth will be modest next year, but we're going to avoid that hard landing. Have a listen.
It is going to remain a very challenging environment for growth over 2024. I think the bigger source of uncertainty is, what's happened to the economy in Q3 and Q4 of this year coming off that contraction in the second quarter. We do expect things to stabilize over Q4. We do expect to see a return to low but positive growth. And over the course of 2024, we should get closer to those trend-like GDP numbers. That does mean excess supply is going to continue building over the course of next year. And we don't, we'll also see a bit of a tailwind when the Bank of Canada does begin to ease off of its restrictive policy stance over the second half of the year. Now, population growth is still continuing to provide a key driver of GDP growth, so that is going to keep us from tipping into a steeper slowdown. So we look for GDP growth of 0.9% next year. We think with that population growth, you are still going to continue to see a job growth throughout the year, but job growth will continue to be outpaced by the growth of the labor force. So we can see unemployment rate move higher as the economy moves further into excess supply, but we don't expect the type of material job losses that you might anticipate with a weaker growth outlook.
So there was a lot in there. Obviously, Robert arguing that we will escape a hard landing. There will be growth. It'll be a little bit tepid. Immigration will support it. Something he slipped in there that maybe will almost go unnoticed if you don't sort of draw it back out. He's talked about when the central bank starts easing by the middle of next year. I mean, this has been a big question we keep getting. When are the cuts going to come if they're done? Most of the people who speak to TD think this is about a halfway through 2024 story before you'll start seeing the first cuts.
All right. Who else do you have?
This is an interesting one. David Mao, he's a portfolio manager at TD Asset Management, was on the show. We were talking industrials. You can put cars into there. And I think a lot of people have noticed, and he's been noticing as well, the electrification of everything. Everyone's going to be driving an electric vehicle. Well, there's been a slowdown in demand for EVs in this environment. Ford, just the latest on that front. David Mao sort of broke it down for us, gave us a few reasons for the slowdown.
And we're seeing electric vehicles sitting on dealer lots for a lot longer now. So previously, an EV would reach a dealer and it might sit in inventory for 30, 40, maybe 50 days. More recently, in the past couple months, we're seeing electric vehicles sit on dealer lots for closer to 90 days. So that's a big difference. And admittedly, we're seeing a lot more supply, so a lot more manufacturers have been rolling out new models. Production has ramped up, so there's more supply, more inventory, and less buyers. So we're seeing that slowdown in demand. As far as what goes to explain this slowdown, there's a couple of things. I talked about the pool of buyers getting smaller. The other thing is price is still a very important consideration, right? Price and affordability. So with an electric vehicle still costing probably 20 to 30% more than a comparable internal combustion car, consumers, especially in this high interest rate environment where affordability is actually a lot harder now, consumers are just looking for a cheaper option.
Everything's slowing down a bit.
Electrification of everything may take a little more time than we thought.
Yeah, it's funny how, recession does kind of stop that kind of stuff from happening, even if it is a soft landing. Who do you have coming up?
Next week, we're having one of our shows where we show our viewers how to better use the web broker platform. Jason Natick will come on.
He's one of my favorites.
He's very good.
It's one thing to know it's one thing to know what to do in the markets, another thing to actually execute it on the platform, right?
There's a lot of things to know about that. Haining Zha is going to talk China, and I find that is an interesting one because, of course, at the beginning of this year it was supposed to be game on because China reopened. That didn't turn out either, and then lots of other great content for the week.
All right, that's Greg Bonnell coming up on Money Talk Live next week. That is our show for tonight. Comments or questions? Love to hear from you. Send them to moneytalk@td.com. Thanks for watching.
The preceding paid commercial program was brought to you by TD Wealth.